Good afternoon. It is April 26th, 2022. This is Ron Brown. This is going to be a short video. Just want to show you something you can do with, or a couple of things you can do with HGSI, even in a very, very weak market. If you look over here at the right, you'll see the daily candle for the NASDAQ composite. You can also see, or you can see that it came down and tested support. Critical support. If it breaks through here, I'm afraid we're in for a long year in the markets. It has held so far. Everybody looks at these support areas, and some people come in and start buying it at those levels. Now I want to get this out of the way. I want to show you what I've got for you in HGS Investor. Now I have several views that I use when I'm looking for stocks that have sold off and are coming up from the daily low, or they've gapped up in the morning and so on. But what I'm going to concentrate on right now is this number 3. It's an intraday bullish reversal of 1% off of the low, and the fan is up. What I mean by the fan is this fan over here. It's the exponential moving average fan. It is the 200-day, the 100-day, the 50-day, the 18-day. Those make up the fan. Now the 3 and the 6 are crossovers. I use those for buy points, buy and sell points. So the fan is up. I just happen to have Hudson up here because it's at the top of the list. It's driven to the top of the list by a combo rank, which is based on the percentage range and the percentage volume intraday, which would be over here, the volume and the range. You can see that this is trading at nearly 97% of its daily range. It's fired a effort to rise VPA flag, and if I direct your attention over here, you'll see a multicolored chart. This is something I've worked on for quite a while now. What this chart does is it corresponds to these columns in the warehouse: volume, spread, and close. These are the 3 things that Wyckoff looked at 100 years ago, and they still work, and I'll show you this. So let's look at Hudson. This information is from yesterday. Volume was above average, the spread was above average, and it closed in the middle. And this right here where my mouse currently is, you can see that that's the case. Volume was above average, slightly above average yesterday, and the spread was above average. The spread is the high minus the low, not the candle body. It's the entire day. So the spread yesterday was above average, and the close was in the middle of the range. So that's yesterday, but today you can see that this information pertains to today. It gapped down 1.74%. It's up 5.21% today, trading at 97.96% of its daily range, and up 7% compared to the open, and 7% compared to the low, with volume running at 130% of normal. Now as I click on the next day, take a look at this row right here, and this will show me what the current information is for today. So the volume's high, the spread's above average, the close is very high. The market is not closed yet, of course, and this is what we see with this candle. And it is being driven to the top of this list with the combo ranking. Now looking at this chart here, you see dark green bars after a couple of rose bars, and if you look down at the bottom, you can see that the 3 is still below the 6. If we're above, or when it goes above, it'll turn green. But you can see right there that it hasn't quite reached that. Still, we are getting 2 days of strong demand using the fields up here, what I call my Wyckoff fields. Each of these colors represents something. Now, there are some rose colors in there. Those are negative. There are some days that really don't match any of what's in my filters, so those are white, but the other ones are all colored and they all signify something. Now, this chart is in under Wyckoff VFB charts, and it's down here. It's number 8A. If you look at this chart, if you have my files, and if you click over here on the Choose Create View and go down here to the bottom and look at the comments, it's going to tell you what each of these bars stands for on the bull side. I don't have enough area here to fit the bear information in too, but you can look at this and determine, for example, back here there was a cyan day. What's the cyan day? Well, you look down here, it's a narrower price spread on higher volume, which signifies demand. That was a demand day. This was a demand day. So is this. Heavy demand on the dark green. The lighter green, here's a lighter green. There's demand, but it's not as heavy. But all that is explained within the charts if you click on here. Now, if you want the bearish information, you just go down to the supply folder, click on this, and then when you bring that chart up and click on the same information, it's going to tell you what the bearish bars are. I'll go back to the demand, the bullish side, since we're looking for stocks that are going contrary to the market. And I'll just go down to the next one. You can see at the close yesterday, volume was high, spread was wide, closed in the middle. Let's bring it up. You can see the fan is in place. Yesterday was a gap down, and it didn't generate a signal. Notice the white bar here, because the filter criteria were not met exactly. So no signal here, but you can tell it's a spinning top. And then look what we have today. When I click on this, very high, widespread, closes very high, sentiment's bullish today, and an effort to rise. But during this period here, you can see most of these bars were green with an occasional rose bar, but down here, this is why I put the 3-6 crossover in here to help us ignore bearish signals in an uptrend. That's all I'm going to do in this video. I don't want it to get too long. I'm going to do a webinar on this next week, probably a week from Thursday. I'll send out a notice to everybody in the Insider Club, and I may open it up if there are seats available. Thanks for listening.